All right. Welcome to this lesson. In this lesson, we're going to be learning. We're going to do an introduction to candlesticks. All right. So right now, I'm on the TradingView platform. TradingView is a platform where you can actually get to do analysis. So it's built for analysis, just like your empty form. Okay, so previously, our last lesson, we talked about market structure, where we identify the structure of the market. And then in this lesson, we're looking at candlestick patterns. Remember when we started, we said the price can move, price can be measured, or rather can be viewed in three forms. Number one is the line chart. Look at it here. See the line chart. Okay. And also you can view the candlestick patterns, and then you can use the bar chart. All right. Candlestick, the line chart, the bar candlestick, the line chart, the bar chart, the candlestick, the line chart, the bar chart. All right. All of these have their own importance, but the major thing you want to learn is the candlestick, and then a little of the line chart, just for you to actually get to know the levels that you're trading on. So quickly, let's look at the candlesticks. Now all of these candlesticks, like I said, on the 4 hours, each candlestick you see here represents 4 hours of price action. 4 hours of price movement is what you see here. So basically what is happening here is that price has moved, and created structures within the 4 hour time frame like this, using the candlestick patterns that I'm going to be showing you today. So candlesticks are they are called the Japanese candlesticks. They are very, very important. They are used for charting analysis, and then they are used to actually get to know how price is moving or wanting to move. You can predict the movement of price, the next move, by knowing the candlestick patterns that are displayed. Okay, so that is why we need the candlestick. All right, so let's jump right into it. Now, what are the candlesticks? This is the best definition of the candlestick. You need to understand this is very important. This candlestick, it has what we call the shadow. It has the body. It has the lower shadow. All right. It has what we call the wick. It has the high. It has the close. It has the open. It has the low. The candlestick can either be bearish or either be bullish. All right. So remember, when you see the green candlestick going up, we say it is bullish. And we'll see the red candlesticks coming down, we say it is bearish. So the candlesticks coming down is bearish. The candlesticks going up is bullish. All of these have a way of reading them. You need to know how to read them. It has the open and the close. It has the high. It has the low. Every candlestick has this anatomy. Very, very important. So you need to study them to know how they are. The high, the open, the close, and the low. Now there's a way the candlestick will close. We tell you there is pressure for buys. And there's a way the candlestick will close. They will tell you there is pressure for sells. So if two candlesticks are in the same place and one has a longer wick than the other, then you know that the price is telling you something, because every candlestick is telling the story of what the buyers and the sellers are doing at that particular time. So Japanese candlesticks can be used on any time frame, whether it be on the 1 day, the 1 hour, the 30 minutes, whatever. They are used to describe the price action during the given time frame. The Japanese candlesticks are formed using the open, high, low, and close of the chosen time period. Alright? So If you close above the open, then a hollow candlestick, usually displayed as white, is drawn. All right. If the close is below the open, then a filled candlestick, usually displayed a back as black, is drawn. So the basic thing is that when you see the candlestick having a very long wick to the downside, then it's a sign of pressure, of buying pressure. All right. When the candlestick has a long wick like this to the downside, it's a sign of buying pressure. So let's take a look at what we're talking about right now. Now this is the candlestick. This is the body of the candlestick. Now this is the wick high and this is the wick low. All right. So when a candlestick is this is how they look like. Now when you see a full candlestick like this, it means there is pressure in the market at that time on this candlestick, depending on the color it has. Let's look at it to be blue. Let's look at it to be blue. All right. So this signifies buying pressure, meaning there are buyers in the market. Now when you see another candlestick, this one has to be red. All right. This signifies sales. All right. So the blue is for the buy and the red is for the sales. All right. So candlesticks are always telling a story of how price is moving. That is why you need to study them very well to know what they are saying. It is very, very important that you study them to know what they are saying. Okay. So when we do our analysis in trading, we look at the candlestick patterns that play out to take a decision. All right. We look at the candlestick patterns that play out for us to take our trading decision. This is so because the market will always move, creating structure, and this structure can only be identified, can only be read correctly using the candlesticks. For example, now look at what I just did here. Now this is a level in the market where the price failed. The price came to here. Look at the rejection here, and the price left for a long time. The price came back again after a long time, and then look at what happened. Another rejection again, and then the price left again. So that's to say this level is a strong level. Okay. So with what we are seeing here, the rejections of the candlestick, the multiple wicks that the candlestick is showing here, from in respect to the body of the candlestick, it means they are rejecting this area, they are rejecting this zone. Okay. So because of this, we see that the pressure of the market moved to the upside after we saw the rejection. All right. Now look here too. You see, after multiple rejections, the price left this area. See the candlesticks rejecting, they left. Rejecting, they came down. So when you are studying candlesticks, you look at the body size relative to the wick size. The wick is the area where the price could not cover, where the body is where it is filled. All right. So another example, we can have a candlestick like this, and then the wick is longer. Sorry. All right. The wick is longer than the body. This is a sign of rejection. And you can have another candlestick like this. And you see a very long wick to it. This is a sign of rejection. This is a sign of rejection. So you must understand these patterns at all times. There are different types of candlestick patterns that we are going to learn. Some are for reversals, some are for continuation of trades, so on and so forth. So I'll give you a kind of a candlestick pattern chart, and then you have to study it and then know what you ought to do. So I'll give you an assignment. You go and study more on the candlesticks, and then you start practicing. Look at your charts to look at them, the ones you see. All right, so generally I'll give you 15 candlesticks pattern that you learn, and then you start trading. So the candlestick is a way of displaying information about an asset price movement. Candlestick charts are one of the most popular components of technical analysis, enabling traders to interpret price information quickly and from just a few price bars. All right, so this article focuses on daily charts, wherein each candlestick details a single day's trading. You have to start from the daily time frame. All right, so first of all, the candlestick has the body, which represents the open to the closed range. It has the wick or the shadow that indicates the intraday high or low, meaning where the price closed. Is it high or low? Because at some point the price has to be high or the price has to be low. Then we have the color, which reveals the direction of the market movement. A green or a white or a red candle, body indicates a price increase, while the red or the black shadow, black, shows a price decrease. All right, so you have to practice reading candlestick pattern. There are 6 bullish candlestick patterns that you must learn. When we talk about bullish candlestick pattern, we're talking about the uptrend. All right, when price is moving to the up, there are price candlestick patterns you can use as trajectory to know where the price is moving to the upside or not. So the first one is called the hammer. The hammer is a candlestick pattern formed of a short body with a long lower wick, and it is found at the bottom of a downtrend. So this is what the candlestick the pattern we're talking about. All right, you see the huge rejection on the wick, you see the long wick, automatically you see the price moving up. So it's a reversal candlestick pattern. Then you have the inverse hammer. All right, this is the inverse hammer here. It's a replica of this, but it is inverted. So when you see this kind of price actions, we call them price action, the way the candlesticks are behaving. When you see this kind of price action, is a potential direction to the upside. The next one, we have the bullish engulfing. The bullish engulfing has to do with 2 candlesticks. One has to be bigger than the other, and then it engulfs the under totally. Then you see the price change direction. Note, when you see this kind of the candlestick patterns, they have to be at a level in the market. The candlestick pattern has to be at a level in the market, like what I showed us here. You see, it was at this point, at this level, it was at this level that the price changed. All right, this is a level the market came to before, and it came to again. You see the huge rejection here, you see the morning star formation here, and then boom, price went up. All right, so you must learn this candlestick pattern. They are very important. Then what do we want to call the piercing line? The piercing line is when the candlestick, one is strong, one is red, one is the green or the blue, any color you choose to use, but the second one is 50% of the previous one. All right, look at the way they are arranged. Then you know that the price is going to change direction. All right, so when the price is going down, the red is down movement, and then you see this kind of candle occurring, it means the price is about to change direction to the upside. All right, because price action helps to determine the next movement of price. Then you have the morning star. The morning star is a candlestick pattern that it consists of 3 candles. All right, that you can use to determine a reversal in price direction. It consists of 1 strong bearish candle, a little indecision candle, and then you see another directional candle that shows you the direction the price is about to move. So when you see these three patterns, you know the price is changing direction. So you have to learn to recognize these patterns. And we have the three white soldiers. All of these are candlestick patterns you will learn, but take your time and learn them one after the other. Don't be in a hurry. Learn them one after the other. So you see these three candles the same way, they are moving in the same direction with a strong momentum. It means that they are changing direction. Then we have the 6 bearish candlestick patterns. When we talk bearish, we talk about the downside, we talk about short, we talk about going down. Bearish movement, we talk about going down. Alright, so the same thing, you have the hanging man. When you see this candlestick pattern in an uptrend, know that it's reversing down. If you have the shooting star, the same thing with the inverted hammer. When you see this in an uptrend, know it's a reversal. The engulfing, bearish engulfing, when you see it in an uptrend, the price is going down. Alright, the evening star, the same thing. When you see it in an uptrend, the price is going down. The 3 black rows, the same thing. The same candlestick patterns we use for the long, for the bullish market, the same candlestick pattern we use for the bearish market, depending on the place you see them. Alright, then we have the dark cloud row, the same thing. 50% of the previous move. When it's higher, then you have a lower confirmation, then you know that the price is coming down. Alright, then we have continuation candlestick patterns. Continuation candlestick patterns, they tell you that the price is continuing the trend, that the price is not reversing. The ones we looked at are reversal patterns. They help you to know that the price is about to change direction, but these ones we are looking at right now are telling you that the price is going to continue. Number one is the doji. The doji is like indecision. It doesn't tell you anything, it's just showing indecision. That means it doesn't have a clear direction of where the market is going. When you see this thing appear on your chart, you have to know that the price will move to a particular direction not yet known. Alright, so that is that. Then we have the spinning top, the same thing. 2 doji or 2 candles having the same level of height, the same level of body size. You don't really know where they're going. You wait for another candlestick to know the direction of the market. Alright, the 3 falling method. When you see 3 candles lapping together going in one direction, then you know it's a reversal pattern. Then the 3 rising method, the same thing. Okay, so these are the candlestick patterns that you need to know as a beginner to start trading. There are other ones advanced, but you can start from here. So you need to know the bearish candlesticks, the bullish candlesticks, and then the continuation candlestick patterns. Alright, let's go back to the chart and let's see. So on our chart, what we're going to do is that we'll start recognizing some of these patterns in the chart. Very, very important. So you dedicate your time to start looking at the candlesticks and how, where they appear and what potential they might have. This is very, very important. Now, because that is how you can only be able to determine price movement. Candlesticks occur in every time frame. Alright, these patterns occur in every time frame. And then you can see here what happened here. The 3 black crows. You see this bearish, you see the indecision, you see this push, and then you see the price going down. It's a reversal candlestick. It's a reversal candlestick pattern. Alright, so you see here, you see the bearish engulfing, the bears engulfing the bulls, the bulls, and then you see the price going down. Here you see the small, you see the long wick rejecting this area, and then the price going up. All of these candlestick patterns are important and you have to recognize them. Okay, you look at here. Alright, the 3 method. Alright, call them the evening star. Alright, you see the price moving up. So these candlestick patterns occur in every time frame, and then you can be able to spot them accurately to take your trading decision. But on the higher time frame, they work best. Alright, on the higher time frame, they work best. So what you're going to do is go to your chart, look at any of the currencies you want to look at, and then begin to try to identify some of these candlestick patterns we've talked about. Okay, try to identify them, and then you start learning how the candlesticks work. Very, very important. You know how they work, and then you'll be able to know when they appear in a particular area, then you know it's a reversal candlestick or a continuation candlestick. It's either it's continuation or a reversal, a continuation or a reversal candlestick. If it is below, then it is a reversal. All right. If it's at the top, remember we buy low, we sell high. If at the top, look at the pin bar here. Look at the way the market came down. This is what we call the pin bar. We discussed. It's a reversal candlestick pattern. Look at here. You see the morning star. It's a reversal candlestick pattern. All right. See the huge rejection of the hammer, inverted the hammer here. You see the huge move to the upside. So all of these are the candlestick patterns, and you must learn to recognize them at highs and lows. Very, very important, because those are the turning points in the market. All right. So thank you very much on this video. The next video we'll be looking at a simple trading strategy. We'll look at support and resistance. That does it. Thank you.